the Indian aviation sector is soaring and how. From about 169 million passengers in financial year 2013-14, India's total air passenger count touched an impressive 345 million in FY19. At present, air traffic is nearly 97% of pre-COVID levels. Analysts say a host of factors is fueling Indians' appetite for air travel, keeping the growth outlook intact on a long-term basis.
The recent deals in the Indian aviation sector is a very big positive in creating an international hub in India, which is the third largest aviation market and the fastest growing aviation market in the world. There are multiple factors which makes the Indian aviation story a very good from a long-term perspective, including rising passenger traffic, which is close to pre-COVID levels, rising income and the middle class, which will boost both the international as well as domestic traffic, the rich demographic dividend of India, and also the government's focus to improve the regional connectivity under its UDAN scheme.
Industry experts peg passenger traffic growth at 25 to 30% over the next 3 years as airlines build capacities to support demand. Air India recently placed an order of 470 aircraft, which is the highest ever in the aviation industry globally. Moreover, industry body CAPA expects other domestic airlines led by Indigo to place orders of 1,000 to 1,200 aircraft in the coming 2 years. That said, the next 6 to 12 months may be turbulent for the stocks as a possible rise in crude oil prices and increased competition may negatively surprise the markets.
So perennially, one major issue is the oil price. Okay. So the oil price, once in 2-3 years, it comes and hits this industry by spiking. Now, for example, because of opening up the economy, and secondly, OPEC this week has predicted that oil demand, global demand will go up, quite significantly from the middle of this year. So, once in a while, the oil spike will hit them. There is no doubt about it. So, which is quite possible in the second half of this calendar year, because from mid of this 23, many economies are expected to improve their GDP growth. That is one. So, this is a structural problem, and therefore, the linear profit growth is unlikely to happen for the industry as a whole. Real mighty competition. Now, Indigo is going to face very severe competition, because Tata Group backing is there, and they are also, thinking, planning to merge Vistara with Air India. So, this is another structural change which would be negative for all small players. They would find it difficult to survive, and also negative for Indigo because it would find it difficult to consolidate and retain the current the market share, which is above 50%.
From investment viewpoint, Chokkalingam suggests long-term investors could buy Indigo shares after 10 to 15% correction. Brokerage firm JM Financial too said Indigo will likely benefit from sharper demand comeback and relatively weaker crude environment. However, its ability to maintain market share and run glitch-free superior operations in the face of stiff competition from the Tata Group will be the key determinant for a sustainable rally beyond crude cyclicality. Overall, analysts remain cautious on the sector's near-term prospects as elevated ATF prices coupled with increased competition will continue to pose a major threat to earnings and the liquidity profile of the airlines in the near to medium term. Over the long term, an established limited players market with revenue share stability will support the outlook. As regards today, global cues and stock-specific action will guide investors.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.